Thanks for watching the Not Your Broker Blueprint, sponsored by Bitget. In this conversation with Pat Felder of Prismatic Capital, we talk about fundamentals that are driving the market as well as the top DeFi projects you need to know about. Please use our referral link in the description below to support our content and to get 20% of your trading fees back. And as always, none of this conversation is financial advice. Please do your own research and make your own trading decisions. Like and subscribe, and we'll see you on the next podcast.
All right, part two with Pat from Prismatic. We're going to talk some specific projects. Our format is fundamentals, then we're going to throw charts up, and we'll have Mike discuss some charts. Starting with Curve, Pat. You got some data here that we'll look through first.
Yeah, Curve's Curve's a really interesting project. I think I always look for projects that consistently innovate in DeFi or anywhere in crypto. And these guys have done a number of things kind of ahead of the curve before everyone else, and then typically the market follows them and everyone copies them. For people that don't know Curve, they started out as doing purely stablecoin swaps initially. That was their thing. So if you want to swap like USDC to USDT or this currency to that currency, their big innovation is you could do that with lower slippage, even when the liquidity pool is unbalanced. They have something called a stable swap invariant that enables that, and the factor that kind of determines. There you go. Yeah. So pull up one of the pools. Go to pools. Go to the first one. Go to 3 pool. Go to pool activity. Yeah. So there you can kind of see all the swaps going on. Do you see where it says advanced? Yeah. So if you go down at the bottom, pool parameters A. So that A factor, that is the core variable that determines how swaps happen. That's a really important factor there. And that's actually like the big kind of breakthrough they pushed out into the market. It allows, like, if a liquidity pool has like 100 million USDT and maybe like 50 million USDC, it's pretty unbalanced. Those are supposed to be around the same. You could still swap those assets close to peg without like a ton of slippage. And as that A factor increases or decreases, it changes how far out those tails get pushed out, how far out that slippage. It just means like the people that come out of the pool last get hit the hardest. Anyway.
Well, this is interesting because I remember telling Mike, I'm like, hey, man, I'm going to show you this Curve thing. The website looks like you're on Windows 95, which the aesthetic is amazing. I mean, like, it just adds to the whole lore. But this is fundamental innovation here.
This is the new version of the UI.
It is, yeah.
Go to classic UI in the upper right-hand corner. You can see what it
I
used to
remember
be.
Pat showing me Curve, and he talked to me about, get caught up on the Curve wars.
Yeah.
And I remember just going through some of that and really diving into Curve and being like, wow, like, this is awesome.
Yeah.
I was like, I loved it. I love Curve.
Yeah, one of the innovative things they do is or pioneered was this thing around their tokenomics model, where they're constantly emitting their token into the market, but it goes through their liquidity pools. So if you're deposited into the liquidity pool, you get their token. So it's a source of inflation, but where they get emitted to is determined by the people holding the Curve tokens and locking them up. So it creates like some really interesting game theory. Where should you be locking? It's inflationary.
It's pretty fascinating.
Yeah, so it ends up being DAOs or people that want to maintain a liquidity pool want Curve because then they control where the emissions go. So it's, it creates what's known as the Curve wars.
And that actually system, I know when I was working in DeFi, we were playing around with those mechanics a little bit. Very innovative. Again, another fundamental innovation with DeFi where the governance system is kind of built into the mechanics of how it works. Can you explain, Pat, just the different pools here, what they are, how they work, and when someone looks at this screen, especially if they're not native to the space, how they should think of these different pools?
Yeah, so although they started with stablecoins, that was kind of their main thing. They branched out into like everything. So you now have all kinds of liquidity pools here, ETH, like all kinds of tokens. I mean, it's permissionless. Anyone could come in here with their own token and launch a pool, and people do that. So here you're looking at all the different liquidity pools. The first one is 3 pools, so that's 3 different types of stablecoins: DAI, USDC, USDT. That's like one of the most popular ones. You could see has 184 million of a value in there right now of stablecoins, and this is actually big. They did 173 million of volume today. That is because the market sold off. Typically, when the market is volatile, you get people rotating into stablecoins. You get a lot of activity on Curve.
And there's this concept of the building blocks of DeFi, the Lego blocks, if you will. So it's not just people coming to this interface and interacting with this pool. Essentially, there's a whole ecosystem of third-party applications that are tapping into these contracts and adding that to the functionality of their contract. And, it's all kind of interoperable with each other.
This is one of the reasons I love Curve. I look for projects that have a whole ecosystem, and they're at the foundation of it, because that's how you get these network effects just entrenched into the valuation, which is hard to create, but once they get going, it's very, very powerful. So there are dozens of projects built on top of Curve, like too many to list, that all do different things. Convex is the most popular one. What they do is they essentially take locked Curve tokens and make it liquid. So if you have Curve and you want to, for whatever reason, lock it up, whether you want to earn higher fees or you want to control emissions, you can deposit it into Convex. They max lock it for 4 years, but you still have an exit. So you can still exit that position at a floating peg. That's Convex's like core value proposition. So
yeah, they're high beta Curve.
Yeah. And because of that, they control over 51% of Curve's emissions. So they won the Curve wars.
Yes.
Yes. Yeah, it's just a sinkhole for Curve. But because of that, I think of them as high beta Curve. And we can show the chart later in a few minutes. We'll go back to that point.
Yeah, I just want to highlight 2.5 billion in deposits, daily volume, almost $500 million here. I know few years ago when DeFi was just starting out, there was a lot of, is this risky at the contract level? Could there be exploits? Of course, those things are always still possible, but the longer that these contracts exist with that kind of value in them, it builds its own resiliency and security from that, because these things have been attacked or attempted to be attacked for the last 4 years.
Yeah, it's also worth mentioning, like the worst moments of 2022 during FTX and Three Arrows Capital, Luna, just all these volatile moments where the market was in free fall. I mean, you couldn't really log into Coinbase or any other centralized exchange, but Curve was fine. A lot of the Uniswap was fine. All the decentralized protocols, you could still tap into their smart contracts and trade. So that's like the power of DeFi.
Yeah, and also like the liquidations were enforced. So, which again, really, really cool is that the loans outstanding to centralized entities, like for instance, Genesis to the Gemini users, those loans had to be, figured out in court, and still are ongoing years later. However, all the on-chain loans to Aave and these other parts of the ecosystem, those liquidations happen programmatically, right? And didn't require a long drawn-out court system and, court process. And right here on DeFi Llama, you can kind of see all the areas broken down by protocol, as well as the liquidation amount at those areas.
Yeah. And the way those liquidations typically happen is, let's say you have a loan for you have $100 of ETH collateralized and you take a $50 loan. So when price of ETH goes down $50, like you're liquidated instantaneously. Your collateral's just seized programmatically by the smart contracts or by the bots, and force sold into the market. And you still, you're off the hook for your loan. You keep that money, but your collateral is then gone. The one of the cool innovations of Curve, once again, they just released this a few months ago, is their stablecoin, Curve USD. So you can put up collateral like ETH or Bitcoin or something, and print their stablecoin against it. But the really cool innovation, once again, that no one else has done is you don't get liquidated instantaneously. You select like a band, like a price band, and get liquidated across that range gradually. So liquidations happen really slowly. And then if price recovers, your collateral gets sold back in. So you don't, yeah, you could literally, the market could crash. You could get fully liquidated. And then 2 days later, the market's recovered and your collateral's back there. So no one's done anything like that. This was just released and they've seen massive growth in their stablecoin since then. And now they're launching lending markets. They're going to have the same liquidation mechanism around lending markets, which they technically just released last week, but in typical Curve kind of nerdy fashion, you can only tap into it through their smart contracts, like directly. It's not on the UI yet. So yeah, most users can't get it unless you can navigate smart contracts on the back end. But anyway, with all that said, those are the reasons I like the project. Kind of the fundamentals behind it. Good team, constantly innovating, number of things, strong network effects. Everyone's building on top of them. Kind of just like a DeFi OG protocol.
Maybe before we look at the chart, in your slides here, you had a few slides. Do you want to just run through these real quick?
Yeah, I put together some slides just to showcase like why stablecoin swaps is important, and more broadly, stablecoins in general. I believe stablecoins are one of the primary product market fits of crypto in general. Like if people ask me why we need crypto, why does it exist? The first thing I go to is stablecoins. Bringing stability and stable currencies to people that don't have access to US dollars, which is the vast majority of the world.
And they can hold it on their phone.
Yeah, and they don't need anyone's permission.
Yeah, and they don't need a bank account. They can hold it on a ledger.
Yeah, and they can transfer nearly instantaneously, cheaply.
And they can use it peer-to-peer.
Yeah, it's the future.
It's honestly amazing. Yeah.
I mean, like this is a relevant case. The Central Bank of Nigeria this week came out and saying, hey, they want $10 billion from Binance, and their national currency is in a crisis. Mm-hmm. And, largely due to central bank printing and, whatnot. I mean, talk through this chart. I think that talks into that.
Yeah. I mean, why is there stablecoin demand? It's because the US dollar just kind of is the only currency that somewhat holds its value. Even the US dollar over, 100-year time span loses 99% of its value. But when you look at other currencies relative to the US dollar, over the last 10 years, I mean, this chart speaks for itself. It's horrendous.
That Venezuelan currency looks okay.
I didn't know you could be negative 100, but
they're like trading CS:GO skins.
Yeah. And funny enough, I'm like scanning for the Canadian dollar and trying to see if I can find it.
Well, yeah, that's what's interesting. Even the G20 countries are highlighted in blue. Even those are horrendous. I mean, Canadian dollars
17.6.
Yeah, over the last 10 years. Which is, I think that's surprising.
So the Yemeni rial, the Vietnamese dong, Iraqi dinar. Wow. So it just surprises me, the currencies that have outperformed here. And this is current, right?
Yeah, I updated this a few days ago.
Yeah, I mean, this kind of speaks to even in Canada, our deficit spending is completely out of control. So if you're wondering what drives these numbers, can be deficit spending. I mean, do you have another take on that? I
mean, the US dollar reigns supreme because it's the world reserve currency. Yeah. We are essentially selling our currency and providing it into the world in the form of stability. Like when we print deficits, we are printing essentially dollars that's going around the world for various use cases. And yeah, I mean, it's stability. Countries want stability, and that's what we're providing.
Correct. In the U.S., it's the currency is proof that they are a superpower with no real competition. in the near term. People will have, it was Russia, it was China, it was, it's just simply not the case.
Yeah.
The U.S. is dominating, and it's not close.
A lot of times people will point to the U.S. and look at the large deficit and say, where's the manufacturing? Where are the exports? Like, it's a huge trade deficit relative to all these other countries that are actually making real hard goods. I don't look at it that way. In the U.S., our export is the U.S. dollar. And the way to issue that dollar to the world is through deficits and deficit spending.
Interesting.
And the more people using the dollar, the more powerful the U.S. becomes.
But that dynamic doesn't necessarily add up for everyone else. That's
other
great
countries,
for
no,
the
it's
US
Great for the U.S.
Yeah.
Isolationist. Yeah.
And that's why you hear talk now about countries are trying to devise ways to get away from that, because especially in a recession, a worldwide recession, when their loans are denominated in U.S. dollars and they can't repay them because it's a recession, it gets 10 times worse.
Yeah. So to summarize that, unless you...
No, I was just going to say, because you can see it too, right? Like the countries want to get away with it or get away from it, because look at Europe as an example. Like the U.S. is definitely trying to offload their recession onto other countries through their dollar. Mm-hmm. So those are the dynamics that are truly at play that a lot of people don't factor in. So...
And so I want to bring this back to Curve because, we see the adoption. And again, Pat, I think at the beginning you frame this where other countries, because of all this red, need dollar access. They're doing it through the crypto ecosystem because it's all the reasons we mentioned. You're seeing that in the stablecoin active addresses. Other than general adoption, how do you think about this?
Yeah, I think... in that first chart on the left, stablecoin active addresses, you can see USDT, which is Tether, in purple there, is the dominant one. And why is that? That's the one that's used the most outside the United States for actual, payments and stuff, right? USDC, DAI, that's known more for being crypto native DeFi stuff, US-centric. So yeah, I think that'll change, actually, hopefully, in years forward. But the trend on this chart, it never has pulled back, pretty much. It's up only all the time.
Yeah, and I think you need to go to other countries to understand this. There were some fund managers I saw on some podcasts where they said that especially were from Asia, and they're like, Tether's used in your convenience store down the road to get dollar access. Meanwhile, people in the US are looking at Tether and being like, well, it's all just, it's just fake, right? And people are like, no, actually this is a real utility that average people are using, whether you like it or not.
Yeah, and just to put this in perspective, how big this is, even though we're at still very early stages, BlackRock profit 2023, I think, was around $5.5 billion. Everyone talks about BlackRock owns everything. They own the whole financial system in the U.S. They own, everyone is just talking about it, how they own the whole system. Meanwhile, Tether printed over $6 billion in profit in 2023.
Yeah.
And they haven't even really gotten started in the grand scheme of things. And I think that, more broadly speaking, is why you're seeing the Bitcoin ETF and institutions waking up. Those types of figures that are like, wow, there's a lot of money being made for very simple use cases.
If they didn't think they were going to make a lot of money.
Yeah.
Yeah, it was interesting because the banker for Tether deposits at Davos, someone asked him, is it real? And he's like, yeah, of course it's real. We actually have a great client relationship with Tether. And so the profits are generated because they don't take transaction fees. The profits are generated from their treasury holdings.
Yeah. So for every dollar of USDT, there's $1 in collateral, or more, hopefully. And that dollar is put to work in things like U.S. Treasuries is probably one of their biggest holdings. And they're getting interest on that. And so they just keep the interest for themselves. In DeFi protocols give that interest back to the protocol, the token holders, a lot of times. Frax is a good example. We could talk about that in a minute, but one of the benefits of DeFi, once again, is you know, you don't have these centralized, opaque intermediaries where you don't really know what's going on behind an occasional audit statement.
Yeah.
And they're keeping all the profits. Where on DeFi, everything is on chain all the time, and all the money being made is flowing back to token holders or their treasury.
Yeah, the transparency of the whole system is incredible.
Yeah.
It's
I want to talk about Curve here. Mike, you like Curve's performance. There's kind of two dynamics here. So one was Curve had a bit of a liquidity crisis, you know, kind of in the fall, where the founder had bought some property backed by CRV loans. So yeah, I don't know how you think about this chart.
Yeah, there was liquidation risk at 33 cents. A lot of the background or knowledge of that is actually Pat has a dashboard, which I'm sure would be helpful for most people to have. But yeah, there was significant. We were actually short Curve, I believe, at $1 or something like that. We actually covered the bottom. We had a rally, and then when it pulled back, which is down there, we started to enter back in long. Reason being is high risk, high reward. Of course, there remains liquidation risk. But there was a belief that he would come out, and I think Pat had sent me that he'd start paying off his debt potentially.
Mm-hmm.
So there's that factored in a little bit.
Yeah, I'm trying to pull up the values for how much essentially the Curve founder, you know, it's difficult in DeFi. Like, let's say you start a DeFi protocol, it's very successful, so your token holdings go up considerably. Suddenly they're worth over $1 billion, which his was.
And if you sell, that would be
it's a bad look. Yeah, people don't want to. Everything's on chain. Everyone's watching his wallet.
Yeah,
it's worth billions of dollars. If he starts selling his own project's token, it just doesn't look good. So what do you do?
Elon does this the same with his Tesla stock as collateral.
Yeah.
Yep.
Yeah. So you just use it as collateral, take cash out. And he did that to the tune of, I mean, I'll pull up the numbers in a minute, but it was a considerable amount. And, you know, then the bear market set in. And suddenly Curve price is down over 90%. So suddenly we're right at that unthinkable level where, oh no, I could actually get liquidated and lose my entire, you know, founders tokens.
Yeah.
And that's where we were just like a month or two ago.
Yep.
Yeah.
I think it was further. It was before the new year. It was in this timing, I believe.
Yeah.
Well, even no, we dropped sub 50.
Yeah.
At the beginning of the year, and I know Pat's methodology. Mine's a little different, but I like it still. Was that above 50 good, below 50 bad? Because that liquidation risk remains.
Yeah.
However, because you had this massive death spiral, and you had people step in before to help, there is kind of like a game theory to it, where you go, are they going to let that happen?
Yeah, but was defended quite vigorously.
Yes. So that factors into the thought process behind Curve. And because it's reflexive in nature, the opportunity here from a risk reward profile is huge. And so you could see, like, my low end of this would be about $1 to $1.55 of where I think this should be priced currently. And that's where having fundamentals chart and a guy like Pat to have where you respect their analysis is, I could easily see do this hitting 234 up to 371. Could it go higher than that? I mean, if I was just looking at chart, yes, I do. I don't know what Pat would think. He might be like, well, now you're getting to Looney Tune numbers.
Oh, no, not at all.
I mean, $6-7 previously.
Yeah,
I mean the supply is different.
Well, if you look at the accumulation alone, 1,300 plus days under accumulation. Does this see all-time highs? If you're asking me, I think so. Would it take a good market to do that? Would it take a really bullish DeFi market? Yes, of course. But I think it's possible. And I'd love us to have a chat again if it does.
It's like that saying, if if the bank gives you a loan for $1 million and you go under, it's your problem. If they give you $1 billion loan and you go under, it's their problem. It's the same kind of thing here. The whole DeFi ecosystem
Exactly. Yeah.
came together and kind of bailed him out for a little while. He OTC'd a number of his tokens for cash and paid down some of his debt. And I think it was around like his liquidation level was like 45 cents for a while. Right now,
those tokens are in the money. They were around that 50 cent range on the OTC price, if I remember.
Mm-hmm. But by paying off debt, it's about 34 cents.
Is liquidation.
Is his liquid. Yeah. He gets about over $60 million worth of Curve tokens liquidated, which the market can't handle that. Bots, that would force the price down to zero temporarily, and then everyone would step in and buy. But yeah.
So Convex, Frax. Let's try chat these two.
Yeah, so I think of Convex as high beta curve because people keep throwing their curve into Convex and it can never be taken out. It's permanently locked forever. They keep accumulating more curve, and so their ownership within curve will stay forever high. So it historically, it's kind of like high beta curve, meaning when curve goes up, it goes up more. When curve goes down, it goes down more. That didn't hold true for a while. And it kind of it did hold true for a while, but in the last 6 months, it wasn't really holding up. As curve price was going up, Convex was kind of just moving with it. And it was only in the last few weeks where you started to see Convex resuming that relationship where it would go up more than curve would go up. So you can actually, if you pull up on TradingView, you can see this. What you're doing here is you're taking Convex price and dividing it by curve price.
To get the ratio.
Yeah, to get the ratio. Yeah. And then you can see the convexity of the move. So if you zoom out and go to like the weekly, you can see the relationship.
Big fan of this one. This is where I already see people converting their curve to Convex.
Yeah. Yeah. So, you could see recently how it is high beta. If they were perfect, where for every dollar or every 10% convex goes up, 10% curve goes up, you would just see this flat. But that's not really the case. You could see it went down a lot more during the bear market, and now that it's turning into a bull market, it's picking up.
Yeah, and it will, I think, move quickly as people realize that. I like Convex. I like Frax.
Yeah,
quite a bit.
Pull up Frax.
Yeah, Frax is another ecosystem play in the curve ecosystem. They're another winner of the Convex wars. They own more Convex than any other DAO, and they put that to work, essentially controlling a number of liquidity pools on curve. They dominate curve.
Their founder and CEO is a super nice guy too.
Yeah, he's like a DeFi god. He's a incredible innovator. Frax is one of those projects that puts out more innovation than any other DeFi project, in my opinion.
How do you look at Frax versus DAI? The main differences?
I think Frax does so many cool, interesting, innovative things that DAI seems really boring to me.
Yeah.
Kind of cut and dry. It doesn't mean it's a bad project. It's just like, it's just more cut and dry. I think a lot of the innovations, some of the innovations of Frax, they'll put it out into the market, like their AMO operations. And then after the case, like DAI and MakerDAO pulled some of that into their own protocol. So you usually see, projects leading the ecosystem, the economy, and other projects like copying them down the line. And that's typically what you see with Frax. They tend to innovate, and then other projects copy them a year later. So it's one of the reasons I like Frax is they have a lot of cool things constantly coming out, pushing the boundaries of what's possible. But it's another good way to get exposure to Curve and the Curve ecosystem if you just want to play that.
Here's where the magic starts to happen.
I know, I'm working right now.
We got work going on.
Yeah, maybe another month down, testing this area. pop.
Yeah. So what's
There's the future.
Is this the Frax chart?
Correct. Yeah. Monthly.
Oh, monthly. Okay. This is one of the things I like about Mike is he pulls out really, he looks at things over a longer time frame, which is the proper way.
Yeah.
Especially in crypto because it's so easy to get chopped up.
Yeah, you want to be looking longer term. I think I went over that in our last episode, but start with a weekly, then a monthly, quarterly, yearly. I just think if you're doing shorter time frame than that, you're just bringing too much volatility into what you're looking at. Yeah, so it's like something like here, not to get into my strategy or anything like that, but this is a spot that I would like from a mean reversion standpoint. You have 2 months down, maybe look for another month. But I'd have no problem on a personal level entering into a position here at all. Like this is where I'd be going, okay, I'll start to build it out.
You know what's interesting about this point right now? They're about to launch their own L2. Their own chain. And once again, they're really doing some cool, innovative things with it where usage gets incentivized. They have a point system. So the more people that use it and the smart contracts that are deployed there, the protocols get incentivized through usage and this point system. So it's like a very gamified chain. And because Frax already has, over $1 billion in TVL, a lot of people are saying, well, if that $1 billion or whatever it is migrates to this new chain, that puts them in like some of the top chains out there. So their market cap is like 800 million or something. It's like just fundamentally, it's undervalued if their chain does well. So yeah, that's a big catalyst coming in the next like few weeks.
Yeah. And I feel like charts precede information as well. So even from a fractal basis, I can see that something is brewing. All right, we're going to take a look at Bittensor, which is an incentivized AI network. I know Pat and I have looked at this quite a bit.
Yeah, Bittensor is a core position in my fund that I'm very, very bullish on. They have a lot of parallels to Bitcoin. I think people are calling it the Bitcoin of AI. It's like the main AI play because it's a network that's incentivized. So if you want to invest in crypto and AI, I think Bittensor is like the easy play. Because on one side, it's just the best meme coin. You could just look at it like that. It's the top AI project in terms of market valuation. But under the hood, there's actually some really interesting things going on too.
This is where the capital markets are going to look at this stuff and be like, wow. Because if an AI company is publicly listed, those shares, again, they're great, but you can't incentivize someone from a tokenomics standpoint with those shares. They sit in your brokerage account. Yes, you can be invested in it. Whereas in crypto, some of these, you could have the token incentivizing millions of people around the world to provide little bits of information that might be worth sub a penny, and then you can incentivize them programmatically. Like you just can't do that with equity in the same way.
Yeah, I think that's a mistake a lot of people from TradFi make, myself included. When I was first getting in crypto, it's very, you want to make parallels between traditional markets and crypto and just make the assumption that they're pretty much the same and there's a lot of parallel, but it's totally different.
Yeah.
Totally different like incentive mechanisms in game theory because everything is like being rewritten.
And with AI, that's powerful because it's all about data and people providing data.
Yeah, I mean, the way Bittensor works is they have a token, right? It's called Tau, T-A-O. And there is there's 7,200 Tau a day emitted to the ecosystem. It gets emitted to miners and validators, kind of split more or less half and half. What do miners do? They are training AI models in various target use cases. So it's broken into different subnets. There's like a price prediction subnet. There's a subnet that's more or less like an LLM, similar to what ChatGPT is doing. There's, tons of these subnets that do all kinds of different things. And the Tau tokens are getting emitted to each one of those on a daily basis. To quantify that at today's Tau prices, that's about $4.6 million a day. So you have like, call it $4.5 million worth of value being emitted to this AI model training ecosystem. And it goes to the people that are driving the most value and doing the best at that. That's $1.7 billion a year. That's a lot. You know, so at that, I think of it as almost like an R&D budget that would compete against OpenAI or whatever. And it's
Gemini.
Yeah.
Yeah, but I mean, Google's done this for years with CAPTCHA. So when you do the Google CAPTCHA and you're saying, you know, which one of these squares is a scooter, what Google is doing is using that to teach their image recognition model or their, you know, self-driving, let's say, model on how to recognize things in the real world, because they have millions of people around the world doing a CAPTCHA every day that's like saying, you know, this is a scooter accurately, right? You know, I heard another quantitative thing that another FANG company was saying, we're going to create, you know, thousands of AI jobs in India. And essentially what they're saying is we're going to have a bunch of people around the world that are training our models by doing data capture, collection, cleansing, et cetera. This is another form of that's happening programmatically using the token incentive layer.
Yeah, so that same party, if they have all that data, that's incredibly valuable.
Yeah.
They are training their own models on it. What if they also open it up to anyone else that wants to train their models on it? They can launch a subnet on Bittensor and make their data available for anyone else to use and earn Tau for doing that. So it's another way for companies that have data to monetize that data for AI models.
And in the traditional markets, like people want to get exposure. Right now, they're doing that through plays like NVIDIA at the kind of infrastructure or hardware level. You know, are there pure play, publicly listed AI plays that compete, or you can come here and do this? But I mean, NVIDIA's, you know, worth trillions. Bittensor, I think, has a market cap of like 2 to 3 billion.
It's a little higher. It's 4 billion circulating. It's maybe 10 billion fully diluted, but
I mean, in the grand scheme of AI investment thesis, that's nothing compared to what's in traditional markets.
Mm-hmm. Yeah, and it's I was saying earlier, it has some parallels to Bitcoin. It's got the same Bitcoin halvening cycle. So people are already familiar with Bitcoin tokenomics, and they love the $21 million Bitcoin. There's 21 million Tau with a 4-year halving cycle approximately. So people are already familiar with that. It's being called the Bitcoin of AI. So yeah, I think it's like an interesting way to play decentralized AI. The goal is to compete against the centralized, siloed AI systems.
Yeah.
You know, like Google is not necessarily opening up all their AI stuff, or OpenAI isn't. It's not open. It's actually very closed. They should call it closed AI.
Yeah, and the discussion now is like how, you know, if my data is being used to train a model, am I getting paid for that or incentivized to do that? And in the traditional AI models, there's just no way to pay people 10 cents to give me their data, right? Mm-hmm. Crypto solves all that.
Yeah. Crypto's all about aligning incentives.
Yeah.
And incentivizing all the people properly, even when there's like misuse and people want to game the system, it still works.
Yeah.
And that's what's beautiful about the Bittensor ecosystem, is it's potentially a way to get all people from all over the world incentivized to grow an open, permissionless AI system. Is that going to be competitive against like the major AI players out there, like Microsoft, Google, OpenAI? Maybe, maybe not. Like I don't think it's known yet. But if you want to invest in something that competes against that in an open, permissionless way, like Bittensor's the play.
Yeah. In a worst case, you own an AI meme.
Yeah.
So
the top AI meme.
Yeah, I'm very interested in the subnets and how people are going to come in, and I don't know, Pat had told me about this stuff, but how they're going to extract value from the network. Like that alone, it could be huge.
Yeah, like I'll give you one example. There's one subnet that interests me because it's finance related. It's a time series price prediction subnet. So they're starting off It's a group called Teoshi, is the name of the subnet. Really smart group of guys that essentially came up with an AI model to predict the price of Bitcoin intraday. So their models predict the next, I think it's like, 24 hours worth of Bitcoin price in like 5-minute intervals, and it constantly updates every 5 minutes. And so that is like a core price prediction coming from their AI model that they can then feed into a trading strategy. So they developed the AI model that's done pretty well, but separately from that, they also have trading strategies they developed and came up with a way to trade Bitcoin intraday that has done very well. They claim, I haven't seen it myself, it's not public, but they claim they have outstanding performance. They were going to launch a hedge fund, raise money, and do this. And they came across Bittensor and they were like, wait, why don't we just take that AI model, put it on a subnet? And instead of us just like deploying our own AI model, we'll let miners compete against it. So that way, if someone comes up with something better, it gets fed in to the model and the best one's going to win. So we have everyone competing against us, and then we'll have a better AI model to feed into our trading strategy, which we can still trade. And by doing this and launching a subnet, we'll get tau emissions. And because there's tremendous demand for AI in price markets, hedge funds, quant hedge funds, you pay up for this type of resource, there will be demand. They'll be able to charge users for the subnet. So suddenly they're making money charging like hedge funds for these price predictions, and they're getting tau emissions. Like, it's a lot. I think they, in the last few months, it's in the millions of dollars just from emissions, just their cut.
And plus, they've open sourced it to everyone.
Yeah, and they can now use their like closed off trading strategy. They don't have to open up.
And there's a thing in computer science called adversarial neural networks, where essentially AIs are competing with each other, and the best AIs outperform, and in this case gives you the final product. Mm-hmm. So it is grounded in computer science.
No, it is. This whole thing is computer science.
Yeah.
Which is why it's fascinating to me. And correct me if I'm wrong, these guys are ex-NASA, correct?
Yeah, one guy is.
Yeah. So,
yeah, they're smart dudes. I've spoken with them. They seem legit, and they, in my opinion, are creating like the playbook for how subnets are going to be done. Subnets, this idea of launching a subnet, which is just one use case for like a Bittensor, AI model. This is just time series prediction. There's many uses for AI, but these subnets were just introduced to the Bittensor network in October, I think, a few months ago. It's pretty fresh, so they're just being built. I think these guys are building the playbook for how you launch a subnet, create it like a business, bring in revenue, align incentives, and it literally works out for everyone.
It stands in the face of the U.S. regulators who have stood in front of Congress and said, this is just another technology. And the reality is, obviously it is, but it is not like the traditional technology that's been there. There is so many things you can do with these tokenomics that are incompatible with the current regulatory environment, that I think this is a great example. Like, they want access to this investment category, but can't because it's not regulated.
Yeah, and it's important not to listen to stuff like that, because my dad will be the first one to say, with the internet, he was there from the beginning, right? So he was told that was the next fax machine, the internet. So,
all right.
Yeah, I mean,
now look at it.
Yeah.
Yeah.
Yeah, I mean, these guys want to compete against all the quant funds.
Yeah.
That's their end goal. They're starting with Bitcoin price predictions, but their AI models actually apply to all assets.
It's amazing.
They've already applied it to, like, futures and currencies and Forex. They're just
these charts. Sorry, Mike, do you want to just explain these charts too, real quick?
Yeah, I'm just free bombing this.
Yeah, no, sorry to cut you off there, Pat.
I'm just looking at it in fractals. So, typically humans move in waves of 3s and 5s. And typically you have retracements depending on what fractal you're in. I'm just I think we had a base case of 1,000. that tau will trade at $1,000 minimum and go much higher. So I'm just looking at I think I just zoned out there. I was just drawing that. So I believe, we'll see 1,000. If you do get a retracement, typically be 38%, 50%, 61.8%. So just kind of.
So let's say you're not long this position. How would you think about when to get long?
I believe pros buy unread. So I would be looking for a weekly red candle, maybe 1, 2, 3, and dollar cost average in that way.
Okay. So on that 4,
like try not to FOMO.
Yeah. That fourth wave could be.
Yeah, it could be coming. I mean, this could go straight to 1,000 as part of a 3, and you just adjust accordingly.
Yeah.
And then when you do get that pullback on a 4, you're typically going to pull back 38.2% to 50%. And that to me would say, hey, I believe we're in a fractal 4 wave here. I'm going to look to, and this by no means is like the end all be all. This is just a confluence indicator. You should have other things that are telling you what to do. But that'd be a spot I'd go, as long as all my other stuff was clicking, I'd go, this is a spot I'd like to start entering. And this will help you be more profitable.
Yeah, one of the issues with buying or selling Tau is it's highly illiquid. So you have a multi-billion-dollar coin, and there's practically zero liquidity. No, they don't have support from really no centralized exchanges aside from Bitget. Bitget does support them, but they're not on Binance or Coinbase or Kraken or anywhere else. So there's very, very thin liquidity, and on chain there's hardly any. So what I'm saying is like a very small amount of capital trying to buy or sell Tau moves price drastically. So it just means a lot of volatility, big pullbacks, and when it's going up, it goes quickly.
Yeah, this is an exciting one. I think there's a lot of potential. What are your thoughts on the intense narrative?
Oh, yeah. So shifting gears, intense. So there's a few projects in that space I'm interested in. I think SYMMIO is a really cool one. Intense, just so people know, like in the context of, I guess, SYMMIO enables, it's like kind of the back-end infrastructure for a number of decentralized perpetual futures exchanges. So people that are trading on chain, with leverage through futures. There's different ways of doing that. There's an order book, there's the GMX approach. There's a new model that's popped up recently that's intense based. And essentially the way I think about it is someone like SYMMIO is a middleman between users or traders kind of placing trades on these exchanges and centralized exchanges like Binance. So Binance is like the main centralized like kind of end place where market makers are getting liquidity from. So let's say a trader, I want to buy Bitcoin, like $10,000 of Bitcoin. I'm levering it up 100, X, only putting $1,000 of collateral in. I'll submit my order on a platform and, it's got, the value I want, the price, all that stuff, all the metadata for the trade. That gets submitted to an intense solver network. The solvers are just market makers, really. And you have a group of market makers competing to take that. Someone will be like, I want that order. I'll fulfill it. They click go. It happens programmatically. It's not someone clicking there. But they fulfill the order, and automatically that market maker typically wants to hedge his position. So he'll just put it on, one of the centralized exchanges where he has a relationship, typically Binance. But all of that happens programmatically, and more importantly, everything is made whole for all parties. It's impossible to game the system. Everyone's like fully backed. You can't have anyone fulfilling empty orders that aren't backed by anything. So it's a cool, innovative approach because it allows people on chain to access the deep liquidity of centralized exchanges. Like Binance has very deep liquidity. You can place big orders with low slippage. It's hard to get that on chain. This allows you to port over the entire Binance liquidity book on chain.
Oh my God.
No, it's awesome. It's actually like for I'm sure any VCs that are watching this, that's a hot narrative coming up.
And didn't Uniswap create a lot of that? I know Uniswap V4 is very focused on this, I believe.
Yeah, they're going that direction. Cow protocol. There's a lot of intense-based protocols. It's why intense is kind of like a hot narrative right now, because it unifies liquidity a lot better by having a middleman kind of fulfilling orders, like seeing, the makers and the takers and putting it together.
And like out of those specific companies, what are like some of the companies that stick out to you guys?
Yeah,
like IntentX, Pear.
Yeah, SYMMIO is the infrastructure provider. I think
they're the ones in the background providing for everybody, correct?
They're the ones exactly.
Yeah,
but
we're all using them.
There's a number of front ends. The front ends are like the user interface.
Yes.
Where like if I want to place a trade, I'm not going to SYMMIO. SYMMIO is like back end. I'm not an engineer.
Correct.
I go to a front end, a user interface, and Pear protocol is a really good example, and so is IntentX. Those are like my two favorites. I have positions there.
Shout out Huff.
Yeah. We know the teams there. They're building like really cool stuff.
Huff DM'd me today, actually.
Oh, cool.
Yeah.
IntentX, for example, like launched a few months ago, and on day one they launched support for 180 trading pairs. Like, no one else is doing that on chain. Like, you literally can't do that, but they're able to because of this model with very deep liquidity, low slippage on day one. And
I was kind of at the beginning of on-chain trading with, I won't even name the project, but similar to GMX, where early days you wanted to do on-chain trading, but you could only access 4 pairs: Bitcoin, ETH, Uniswap, and Link, I believe. And so now what we're seeing is that obviously scale out. And part of it was just you needed a counterparty, right? So in the early days, like GMX's model is your counterparty is the liquidity pool.
Yeah, so in IntentX was a great launch. They're doing well. Another one is Pear Protocol. Pear Protocol is launching pretty soon, I think in the next like month or two, if I had to guess. But once again, intense focus. The interesting thing they're doing is pair trading. So you could do like long Bitcoin, short ETH, long Sol, short Doge, and that gets rolled into one trade, like seamless one-click interface, and it gets kind of rolled into an NFT, which you can transfer, you can unwind it. It's its own value that's backed by the trading position. So that's going to be a project to definitely watch coming up.
I love, how Intents have taken care of a lot of the infrastructure, because in the early days of these trading products, when we were building, our product and then competing against GMX, it was very much like the technology drove what the final trading experience would be like. The technology drove the liquidity. It drove the types of trading pairs you could do. It drove the fees, everything, because the technology hadn't come that far. The, liquidity pool as your counterparty model just wasn't super scalable, but Intents has taken care of the liquidity side, and it's allowed these front ends to really be innovative around the trading experience.
Yeah. I think to play devil's advocate, one thing you could say, like where it's not good is, once again, you're relying on centralized parties. So they're porting over the Binance or whatever centralized exchange liquidity. Once again, like the end person is still a centralized player. But I don't think that's a big deal, because at the end of the day, they're not the only one. You're not relying just on them. You're relying on a network of participants.
Yeah.
Where some of them are going to be centralized and some of them are going to be DeFi protocols. And that's what crypto is about. It's about unifying like all of it, letting it compete, and incentivizing it properly.
So this also happened though when FTX blew up, because I had some clients, some LPs that they were adding liquidity to our protocol, but as well as GMX, and they were hedging those on FTX. Mm-hmm. And so even in the kind of old model, like, yes, it looked decentralized, but the LPs often were doing centralized hedges because of just the capital efficiency of those hedges. So that did exist before even.
Ooh, yeah.
So
you never know what you're getting.
I had clients in that time email me being like, hey, we have to pull our liquidity because, our FTX account is no longer accessible. And, that's not great.
Yeah.
So, but I think this is what I like about this, and to the point that we're all getting to, is that I think the Intents model allow for a much more vibrant ecosystem of those providers of, hey, I'll, provide the liquidity on that trade. It can just happen at much bigger scale versus just like it's only institutional players providing the, $20 million at a clip liquidity.
Yeah. I mean, you have a network of market makers competing.
Yeah.
And all those market makers have different relationships at different exchanges and are market making across decentralized and centralized.
Makes it much more resilient.
Yeah, exactly.
Even though it does, that is being hedged out. But any other things you want to touch on, or can we wrap her there?
There's one more project I think deserves a shout out. There's one called Rug.ai. It's another AI project. They don't have a token or anything, but they just launched a few like a month ago, maybe 2 months ago. And it's very, very cool. It's been very useful for me. What you do is you go in, you search any token, and it'll use AI to essentially go through that token's profile, primarily going like through the smart contract, identifying potential vulnerabilities, like where you could essentially get rugged. It's in their name. So, for example, like if maybe they can mint an infinite amount of tokens, that would be a vulnerability that they would highlight. If there's certain like smart contracts, like calls or whatever, that could be exploited by their team, that would be highlighted, and they kind of unify it into a score. So it's anytime like there's a meme coin someone mentions to me that like just launched, the first thing I do is go to Rug.ai and literally just search it and see what the AI says about it. I think that's a good like starting spot. But they've gotten 100,000 signups in the last month. They just launched and they're just blowing up. And I know the team there, and I've spoken with them, and they have a lot lined up for this year. Some really big things that go far beyond just this. So it's worth having them on your radar for 2024 because it's gonna be a cool project.
Yeah, and we also want to shout out Bitget here as well. So I've been looking at this chart. I'm not gonna lie, I wish I had some BGB tokens, but this has performed insanely well. I'm looking at this and thinking this is really pretty crazy. So 19 cents to over $1, and I was just looking at the top exchanges here. I mean, Bitget down in 13th here, 24-hour volume. Comparing that to, at $6 billion. Comparing that to even Binance, the market cap of BNB is so much higher than Bitget.
Yeah, I pulled some of these figures.
Can we talk about them real quick?
Earlier today, one of my colleagues helped me out. Bitget has a $1.3 billion circulating market cap. Binance, for example, which also has a token, $62 billion.
$60 billion, yeah. Well, I mean, it's fallen off because of the pullback, but yeah.
But you look at their like futures, their volume. Bitget has 35 billion in volume over the last, I think, 24 hours, or that can't be. Maybe it is 24 hours. 175 for Binance. So if you just look at that ratio, to kind of like size up valuation for Bitget versus Binance, it's a pretty massive discrepancy. Bitget looks undervalued.
I'm showing it here. Bitget is 5th here. And I don't think the CME group is included in here, but if CME was included in here, it would be up near Binance. But that's a kind of apples to orange comparison. But Bitget in 5th here, open interest at 8 billion versus Binance is at 16 billion open interest, which is really actually quite amazing because open interest is the contracts that are currently on or positions that are currently on, the notional value of those contracts. So volume is significant, obviously, but looking at open interest is also important. We're looking at this data because BGB, so shout out Bitget, obviously sponsors of this podcast, but if you're to look at where they stack up kind of on a market cap basis, there's definitely a lot of good opportunity there potentially. Do you have any other stats on BGB?
No, not really.
Okay. So let's just last check here. So $1.2 billion valuation, fully diluted at 1.8. Again, Binance 60, Bitget 1.2, Binance's open interest at 16 billion, Bitget's at 8 billion. A lot of opportunity there. All right. Well, thanks everyone for joining the Not Your Broker Blueprint, sponsored by Bitget. This is episode 3, episode 2, part 2, but episode 3 for you guys. And we're here to have Pat of Prismatic Capital with a very rich episode of insights and data. So thanks, Pat.
Yeah, thanks for having me.
All right.